Hey guys, welcome. Grant Cardone here. Oh my gosh, as I button up my shirt and my pants and everything, here I am Monday, last Monday of the year? Bye-bye, 2019. Man, you were good to me. Thank you so much. I must say that 2019 was not as good to me as real estate was. I hope real estate's treating you well. Every Monday I come to you, YouTube, Facebook, Instagram. We drop it everywhere we can. You could see me maybe on Bigger Pockets, I don't know, but wherever you're watching this right now, whether you're watching live or recorded, if you like the show and you find value, take a moment, subscribe to the channel. I think over there at the end of the show, you can watch other series that I've done here. I think we've dropped 80 or 90 different real estate shows here. If you love real estate as much as I do, when I started this, when I was 30 years old, looking at real estate, I wish there was a channel like this. So if you like it, if you have a question, post in comments. If you like the channel, take a second and subscribe. I think that's the clue. Okay. Now today, what I'm going to be talking about today is size matters. Okay. There's too small. It won't work. Okay. I know I've been through this. I bought 1 unit and found out it wouldn't work because it doesn't provide enough cash flow, but I'll go into that. Number 2, there's just right. This may sound very basic. And then number 3, guess what? Too big. Yes, there is such thing as too big. And I'll just tell you what my numbers are for these things. Anything below 32 units I think is too small. I'll validate that for you in just a second, just doing simple math. Real estate is a multiplication game. It is not an addition game. Listen to what I'm telling you. Real estate is a multiplication game. It is not an add and subtract game. If you try to play the add and subtract game, I told Ryan Secco this, I guess 3 years ago. I said, Ryan, you got 21 units. It's not enough units. There are 21 separate units. You have to manage 21 separate units. You got rent coming from 21 separate people. You got 21 different properties, 21 different appraisals, 21 different titles, 21 different places to go visit, 21 different appraisals. He's like, well, what should I do? I said, you should sell all those because they're too small, okay? 1 to 32, like somewhere 16 to 32 is ideal for your first deal. I'd love for you to be on the high side of this. I think 32 to 500 is perfect. Now, all this depends on your budget. When you get above 500 and probably 70, you start breaching the 570, 580. I've done all these deals. You get to 700, for sure you're too big, and I'll tell you why here in a second. You can probably imagine if you've ever done real estate that you're going to have some vacancy, right? So watch what happens. I'm just going to bring in the vacancy because the first thing that matters is the number of units, okay? I say this in my book, How to Create Wealth Investing in Real Estate. Number of units is the single most important number in all of real estate investing because that is the number, let's say it's 12, let's say it's 2. We'll take a 2, a 12, a 32, a 320, and a 530. I'm doing a 531 deal right now. Okay, number of units matters most. Why? Because if I change the rents by $25, I make $50 on this deal. It wasn't any more changing the rents. $50 is $50. I can go get $50 walking across the street. Just raise my hand. Can you open the lid on this thing? That just kills me every time so I can see what you're looking at. $50 I can go get by going to the grocery store and saving some money on something. Probably just not buy something. I could sell a pair of socks and get 50 bucks. 12 times 25, what is that? That starts to become a little bit more interesting, right? Because now I'm at 300 bucks a month. Okay, 32 times 25, what does that give me? $800 a month? Something like that. You got to know how to multiply. The 320, yeah, much better. Okay, just kills me the other way. The 320, I'm talking to myself, times 25, $8,000 a month. I should have known that. 32. Look at the multiplier right here, 10x. See, I didn't need to do the math on that. If it's $800 here, it's $8,000 right there. Now that becomes interesting. $8,000 a month. This is why I do big deals. Now, before you shut down on me, oh my God, Grant's disconnected from reality. Grant can go buy 300 units, but the average person can't. Number one, you're not the average person. Quit saying that you're the average person. Knock this freaking madness off as we move into the new year. There's nothing average about you. You got to start thinking big. If you're going to play this game, this does not work. There's nothing about buying a piece of real estate, taking a mortgage out, paying property taxes, managing, picking up the rents, cutting the grass, painting it. Nothing about $50 in that story makes any sense. Like, you just cannot make sense out of that story for me. I got to start somewhere. No, you're justifying being a little bitch. You're justifying little think right here. That's all you're doing. Well, I got the budget. Well, don't think about your budget. Think about what would it take to do the right deal the first time, so you do a second deal and a third deal and a fourth deal. Show me somebody in real estate today that's trying to buy smaller deals. You show me one person anywhere on this planet that did one deal, it was successful. A second deal, it was successful. A third deal was successful. And they're trying to buy deals that are smaller. It doesn't happen. Show me one flipper, one wholesaler, okay? One guy or gal out there that has done enough flipping and wholesaling that they want to do more of it. They don't. They want to get into the big money game. And the big money game is how many units can leverage the multiplier. This is a multiplication game. The reason the rich get richer is because the rich do two things that poor people don't do. You want to write these two things down. Number one, the rich do not think everything's a scam. Poor people do. People that don't pull triggers. People that don't invest in programs. People that don't read books. Oh, it's a scam. It's a scam. Okay, look, I got 30 years of experience sitting in this program, in this book. This is a $12,000 program right here. It's 50 hours of content. Some of you out there like, it's a scam. Guarantee you're poor. 100% of the time I'll be right. You're poor. Rich people will be like, 12 grand, that's cheap. Look at the difference in things. 12 grand. I can't even get my deal appraised for 12 grand. I can't get a mortgage for 12 grand. I can't get the bank to look at a deal I can't find a deal for 12 grand. The broker's going to make more than that on the deal, okay? 50 hours of content right here teaching you how to find a deal, buy a deal, negotiate on a deal, measure a deal, get a deal appraised, how you know if it'll get appraised, the DCR on the deal, how much debt you can get in a deal, whether you should pass on a deal, buy a deal, whether you should pay more, pay less, how to exit a deal, how to force appreciation, how to find organic appreciation, how to find appreciation that nobody else has seen, how to get a deal under contract, all that. See, but some people are like, oh, it's a scam. It's a scam, man. Big think it's a scam. Yeah. See, Jeff and Warren and Steve and the people that have changed this planet, they don't think about scams. They think about solutions. They think about opportunities. So you got to look for the opportunity here. Multiplication, number one. And number two, you're worried about a scam. I'm not trying to scam you. I'm trying to tell you the right thing to do. Quit thinking little, because it don't work. You don't need $50 that bad. $8,000 a month? Yes, that would be worth paying attention. Everybody agree? Okay, because this is what $8,000 is. That's $8,000 a month. $8,000 a month. Watch the math now. $8,000 a month, 12 times, $96,000. If I kept it all, and there is an argument to be had that says, if I'm already operating the property and all I did was raise the rents $50, in every scenario, by the way, that I just shared with you, I raised the rents $50. Every property, the 2, the 12, the 32, and the 360, okay? Was it 360 or 320? The 320. In every scenario, all I did was raise the rents. I'm sorry, not $50, $25. $25. $25 maybe $8,000 a month. $8,000 a month, maybe $96,000 a year, divided by 0.06. That would make me $1.6 million. Okay, that's called your cap rate on return. The next buyer, basically, the next person that would buy the property could pay me another $1.6 million. $1.6 million. Call me up, 305-865-8668, 305-865-8668. If you have a deal, tell me about it. If you have a question, ask me about it. But watch what happens now when I go to 530 units like we just bought. Okay, what's the most important number in real estate? The number of units is the most important. Cap rate does not matter. Price per unit does not matter. Price per square foot does not matter as much. The number of units will determine how much dough you can make. Okay, keep in mind, I'm sitting at 7,000 units right now. This number will be 10,000. Why do I want to get so many units? Why am I willing to give up positions in my properties? Because when I start taking 3,000 units and changing the rents by 25 a month, that's 75,000 bucks a month, times 12, that's 900 grand a year, divided by, cash flow heaven. But more important than the cash flow is the cap rate divided into that cash flow, divided by 0.05. It's $18 million. Every time I raise the rents 25 bucks, I make $18 million. You think the number of units don't matter? You guys got to start thinking, man. Look, I grew up with nothing, okay? Little dude, like all of us. All of us are little people that grew up in little towns and nobody knew us and we didn't have anything. Every person on this planet, Jay-Z, Usher, all these dudes, man, everybody grows up, little dude, nobody knows you. Some people make it, some people don't. But you got to think different, okay? Jay-Z was thinking about how to pedal freaking crack, take care of his mama. And then one day he's like, I got to think bigger. Okay, now I'm going to pedal CDs now. I got to think bigger. Okay, I'm going to sell out arenas. I got to think bigger. I need to own other talent. I got to think bigger. I need to own art and property and royalties and make investments in companies. I need to be in equity. I need to be an owner, right? So again, number of units. If you're a rapper, man, what are you looking at? How many units did we sell? If you write books, how many units did you sell? If you've got a TV show, how many viewers do you have? If you're Netflix, how many freaking subscriptions do we have? It's the number of units. 531 times $25. What does that look like? I just bought what I believe could very well be the best cash flow deal that I've bought in the last 3 years. 531 times 25. And you can set me up with our first caller. It's $159,000 a month, folks. $159,300, in fact. Starts to get interesting. Times 12 is $1.9 million, $11,600 a year, divided by the 0.05, because I'm in that market. I'm sorry, I just created $38 million worth of value.
Gee, we got Lewis from Los Angeles.
Now, before I take Lewis, because he's going to come and he's going to spit some, he's probably going to tell me about some nasty deal out there in the desert. $38 million that I will provide because of this last purchase for our investors, myself and our investors. $38 million worth of value. If I only raise the rents, if I did this right, let me just check my math, okay? Hold him. 531 times $38. And if you're watching this show and I made a mistake, I know you'll let me know. It's $13,225 a month. I got freaked out on myself. 13,275 times 12. See, I got freaked out. That's $159 a year divided by 0.05. Uh-oh, that was a big mistake right there. I'm glad I didn't buy that deal. Based on that, divided by 0.05. That's $3,180,000. See, I took 10x a little too far. This is why I was thinking that, right? Because I know this. I think these rents are going to be raised $200 a month. $200 a month, not $25. $25, I go raise the rents $25 today just because I bought it. I'm changing the rents by $25. Nobody will know anything happened. Trust me, okay? 200, let's see what that is. 200 times 531 times 12. It's $1.2 million a year, new income, divided by 0.05. $25 million, I was off by 6. Okay, let's talk to our callers. Vegas, what's up? Do you have a deal or do you have a question?
Hey, Grant. What's going on,
sir.
Uncle G?
Yes, sir.
Hey, I'm calling from Los Angeles, not Las Vegas.
Ooh, even worse.
Yeah, I know, right?
Even worse, man. What about what's that football team y'all got over there? Los Angeles what?
We got the Rams and we got the Chargers. Which one do you like?
Which one?
Yeah,
which one had the 3 wins?
Oh, man, that's going to be the Chargers. Those guys are doing terrible.
Yeah, they both off.
Hey, Uncle G, big dog. First and foremost, I just want to say thank you, for all you do, all the motivation, all the inspiration. You know, you're very relatable to where I come from. You know, single mother. You know, coming from nothing. So I just want to say thank you for that. You know, for all you do, man. It's really huge. You
got it, bro. You got it.
For sure. So pretty much I want to get down to it. I got a two-part question for you. I currently have two properties. One property right now cash flows $1,500 a month.
Okay.
I bought it for $454. $454 monthly rents. I got them up to a 2-bedroom, $1,650, another 2-bedroom, $1,650, and a 1-bedroom for $1,400.
Okay.
Obviously, when I got them, it wasn't that price. I, you know, with all the knowledge and everything I've learned from you over this past year, I went ahead and did the whole process, renovated it. I got the rents raised up, and now it's profiting $1,500. So my question to you is, do you think I should keep that? I know you say scaling, and I'm looking to scale and go bigger. Do you think I should sell that, or I should keep the property and the cash flow for a little bit longer, or should I just sell it and
okay, hold on. I'm going to tell you what I would do with it, okay? If I understand you right, you're getting $1,650, $1,550, and $1,400 a month, right?
Yes, sir.
Okay, so you're managing it yourself?
Yeah, I'm managing it myself.
And where is it located in Los Angeles?
It's located, I can give you the address, but it's on Century, in between Century and Broadway.
Oh, okay. Century and Broadway. What city? What's the?
That's going to be South LA.
Okay. What cap rate do you think that trades for there?
Cap rates around there, probably, I'd say about that. Mine alone, probably a little bit higher than 12, but around there, probably like 9 or 10.
Nah, no way, dude. And there's nothing in Los Angeles County trading for a 10 or 11 cap. Now you just lost credibility with me. Everything was going on pretty good right there, man. And then you just like, oh my God, yeah, I don't think you could go to like inner city Baltimore and find a 11 cap. I mean, is this the hood? Is this total hood?
Yeah, it is.
Total.
Like, you have to go to the property.
You scared to go there?
With your 9mm.
Yeah. Give me the address.
It's 10606.
10606.
South Broadway.
South Broadway.
Yeah, Los Angeles, 90004.
LA. Oh yeah, man. Man, my map said don't go here. Let's see here.
Only if you come with me. Only if you come with me, you could come by. Don't worry about it. You're good, Uncle G.
Yeah, they know you live there?
No, I don't live there.
Okay. Where do you live? How far away do you live? It's next to the police department, huh?
Yeah, but you would think it's safe because of that, but nah, definitely not. During the renovation, we got broken in every day for a whole week.
Yeah.
So,
it's across from
it's
across from the church, right?
Yes, sir.
Yeah, that's not even keeping you safe. The more they pray, the more they steal. Okay,
exactly.
So look, this is what I would do. Based on all that, all right, that market's hot right now for multifamily in LA, anything that cash flows. Those leases are how long?
Well, they're all brand new leases. So all the tenants that were there previously, they moved out. So they're all brand new leases.
Okay, good. And what'd you pay for the property?
$454.
Yeah, I'd sell it, man. I'd try to make me 100 and get out.
Yeah, that's what it's looking like, and that's it's looking like 100 probably if I get out of there. And that brings me to my next part of the question.
Because here's the deal, dude. You got $100,000 of equity, maybe, making you $1,500 a month. So now this is where the size thing comes into account. Because you only have 3 units, see, it fits exactly the bill. Like, do you really want to go collect rents that for $1,500? Like when I start thinking about $1,500, I could go make $1,500 today. I'll bet you could drop. Maybe we'll find out this year if I can make $1,500 just begging. I'll put a big beard on, go into the streets and just beg. Hey man, can you give me 100? Can you give me 50? How many of you? Please post in comments. How many think I could raise $1,500 in 8 hours, just being on a street corner or outside a grocery store?
You can get that in less time, Uncle G. Come
In a
on
day. In a day. What could I do if I was out in front of a grocery store or a street corner every day? So look at 1,500. If you guys need 1,500 that bad, you don't need to buy real estate to do it. Like, you want to be in a deal that makes you 15 grand. That's why I'm telling you, this show is so important. Size matters. Your perfect size deal, and to find this, you will not buy in LA. Because in LA, somebody's paying for those 3 units, somebody's paying 200 grand a door. Show them the picture of the property I bought behind me. Okay? Does your property look like that? Okay, I'm at 200 grand a door on that property. He's paying 200 grand a door for garbage, okay? Total garbage. And he would admit it's garbage. Is he still on?
Hey, Uncle G, it is garbage. I definitely agree.
Thank
with
you.
I'm
Built
definitely,
what, 1965?
1928.
1928, excuse me. Rehab 17 times. It's been painted more times than this dude's been alive.
Uncle G. All right, part 2 of my question.
Part 2.
Sorry to keep you on so long. But,
Dude, there ain't no
okay,
part 2 on this deal. Sell that thing, man, before you kill yourself. Before you get killed collecting the rent.
This is after I sell this. I have another property that's 4 units.
Don't do it. Don't do it. Don't do it. It's too small, bro. The math don't work.
No, Uncle G, I have it already.
Okay, sorry. Sell it too. What I would do is I'd package them. And now you're selling 7 units.
Can I ask you this, Uncle G? My 4
I don't
unit
know.
right
Let's
now.
see if you can.
My other 4 unit, it doesn't cash flow anything, but it does have equity in it. My question to you is, with the $100,000 I get from the triplex that I sell, do you suggest I use some of that money to pour it into the 4?
No, I don't. Sell the 3 and sell the 4. Okay, before real estate makes you a whore.
It already did, Uncle G.
Okay, let's talk to the next caller, all right? I'm just going to give you the right advice, folks. I'm going to tell you what the truth is. If I don't know an answer to your question, I'm going to be like, I don't know. But I'm telling you right now, I have no investment in whether this guy keeps his 3 and his 4, but not everybody makes money in real estate. Ryan Secco had 21 units in Arizona. I'm like, bro, if you get out and make money, you're lucky. You're lucky because you bought at the right time. You're selling while it's hot. Get your money before you burn your food. You can burn food, man. You can cook it too long. You can go just a little too long. All of a sudden, it's not the same thing. You just should have taken it off 3 minutes ago. Boom, it's too late. Okay, next caller.
All right, we have Ophir from Dallas.
Man,
Ophir.
thank you, man. I can hear you, man, talking into the mic. The dude likes to talk. Let's talk to this man. What's up, bro?
Hello, Grant.
Welcome to the Grant Cardone Show, the Cardone Zone.
Thank you. This is Ophir. I wanted to ask you. I own an interest in 8 properties. It's in a location that I love. It's in Dallas, first of all. I've been looking at like larger apartment complexes.
Yeah, how many units is it?
The one that I was looking at is 50 units, but that one went under contract.
Okay, what's the one you want to talk about? What do you want to talk about? You want to talk about your last girlfriend or the one you got now?
I want to talk about seeing what you think about this deal that I'm under contract with and growing more.
Tell me about it, player.
Okay, so right now,
how many units?
Condos. They're individual condos that I'm already invested in. I'm under contract with another one. The thing is that in this condo, like
how
in Dallas,
many units?
8 units.
Don't do it, bro. Get out, sell them, put them together, fix them, sell them. Go sell them to somebody dumb enough to buy 8 units.
My question is that if I can buy another one, I can keep buying more and more.
Yep.
It's right across from where I live.
How many total can you buy right across from where you live?
Well, there's 93 units on one half, and then there's probably another 93 units on the other half.
Good. If you can buy all 93 of them, you got a great plan. Otherwise, Sell the 8 you got, bro, and start buying some other place. You don't have to buy them across the street, man. Just because something happens across the street from you don't mean you need to get involved in it. Damn, man, something going on across the street. I should invest in it.
No, that's not why. It's because I know that there's value there.
Okay, good. Well, then buy all 93. How can you buy all 93?
So I was going to actually talk to you and see if there was a way you wanted to get in on this. That's why I was calling.
Yeah.
I understand that. So these maybe they're just too small for you, but these are not 50% owner occupied. So after we own like 10%, which if I own like maybe 1 or 2 more on one side, then I'll be at 10%. It's going to be more difficult for other people to get loans. And and I've already done the research on how many people own how many different ones. And I was thinking if I was able to buy out, a couple of these people, it would already be up to like close to 30%.
Very difficult. Very, very difficult. You're trying to buy a broken property. Are they condos or townhomes?
They're condos.
They're condos. Yeah, it's a broken condo project. So it's very, very difficult. HOA fees are going to freaking kill you. Everything has to run perfect. You're going to get down. Even if you get the first 80, the last 13 guys are going to hold you hostage. They're going to be like, dude, we ain't selling. We understand what you playing now, bro. You trying to take the board, dog. And if you're going to take the board, I'm going to take you home. We're going to choke you out, boy. Tap, tap. Okay, let's talk to our next caller. Don't do it, bro. Don't do it. Do not chase the insanity. Go find 80 units that somebody wants to sell right now, folks. Walk into them. Look what I'm doing every day. I buy properties that cash flow. 531 units behind me. Take the time. Make the investments. Find the property that's already cash flowing. I walk into day one, I get cash flow. I put $40 million down on that deal. Next month, I'm going to get a check for the first month I get a check for without figuring out any bullshit. While I figure out stuff, while I do some genius, some Tesla move, I become some Albert Einstein real estate investment. While all that bullshit happens, let me show you what I make next month. Because I spent all my time figuring out how to put the money together to find the right deal rather than trying to put a little bit of money together to make the wrong deal the right deal. You're never going to make the wrong deal the right deal. I'm going to get paid $240,000 next month to figure out how to raise the rents $50. So I'm going to get paid $2.8 million a year divided by 12 to figure out how to raise the rents $50 a month, maybe 200. Let me just do the 200 because I'm optimistic on this property. 531 times 200, 530. That's $10,000 a month. Okay, that'll pay me another $120,000 a year if I can pull it off. Let's talk to the next caller.
G, you got David from Atlanta.
David, what's going on, man? I'd love to buy something in Atlanta.
Hey, Mr.
Yo, what's up, man? What's up?
That's
Hey, that
awesome,
120
man.
grand. Yeah. Anyway, man, I'm getting excited now. 200 times 531 is how much money, guys? It's $106,000 a month. What the hell am I saying? Times 12, 1.2 million. That would increase my cash flow while I wait to raise the rents 1.2 million a year. I'm going to earn 2.8, and my cash flow would go to $4 million a year while I wait for something else to happen. Maybe God intervenes. And maybe OCA wins, or whatever the other chick's name is. Okay? Any of the Democrats get elected, shit, rent's going through the roof, man. Okay? Dems, vote Democratic, vote Democrat. I will raise the rents on every property. I'll be allowed to raise rents on every property I own if the Dems win.
We got David G from Atlanta.
What's going on in the ATL to 404? Is that the right area code for the Atlanta?
Yeah, it is. It is.
Yeah.
Hey, Grant.
You have a
thanks for
deal or
taking
you have
my
a question?
call. Yeah, so first of all, I'm just going to say one quick thing, and then I'm going to get selfish. I'll be honest with you. I got 2 questions.
You greedy bastard.
I know, man. You got to do it when you get GC on the line.
That's
Anyway,
right. That's right. I don't blame you.
So the one thing I wanted to say is I've been following you for a long time and really studying you in depth, all the way from your books to your courses to even delving a little bit into Scientology to see, what's sort of behind the mind. So
that's
I just want
cool.
to say thank you for all that you publish. And just want to say, I know that a lot of times you speak about wondering what you'll go down in history for. And I really think that, it could be the videos, right? It could be the courses. It could be the real estate. But I really think in confidence that it's your ability to, just basically found such mind-boggling ideas that I don't really think anyone else in the field in history has conceived. So,
Oh, dude, that's awesome, man. Thank you so much. I appreciate you saying that.
yeah, that's just my opinion.
Little
Anyway,
heavy, man.
Sorry, I'll get on to the questions. So my first question is a real estate question, obviously, to go with the show. The second one's going to be more about sales, obviously, which is, important to get the money to invest in real estate, as you were just touching on. But so the first one is this. I really love the real estate book. I've read it about 5 times. But the one thing I really wish that you'd shed more light on, and what I wanted to ask you about today is not necessarily, like when you're analyzing a market space, not necessarily like the finite characteristics behind what makes it either good and bad. So like population growth, job growth, walkability, et cetera, that you touch on in the book. I'm really curious as to like specifically why you'll pick out a deal in one place versus another. And what I mean is when you picked up the phone, you're like, yeah, I'd love to buy in Atlanta, but you don't have any properties there. But like you have a place in Savannah that you highlight in the book. And I'm just wondering, like, you say a lot how the population of the U.S. is trending southeast, right?
Yeah,
so,
So I'll just let me explain it to you, okay? Why I love Atlanta, but I haven't bought anything there.
Yeah.
So it's a great question. There's a lot of places I like, but I haven't bought. Like I like Las Vegas, but I haven't bought anything there. I like Phoenix, Arizona, but I haven't bought there. Like I can't buy everywhere, guys. I bought $800 million worth of deals last year, fairly aggressive. But, I didn't buy in Columbia, South Carolina. I like it. Raleigh, I like Raleigh. But I'm, so it takes time to research a market. For instance, Atlanta, the thing that troubles me about Atlanta, Dallas, and Houston, all 3 of them have one similarity. Different from Nashville or Raleigh, okay? What is the difference between, what is it?
Can I guess? I would guess like I live right by Buckhead, and I would guess it's just overbuilt. Like there's cranes in the air literally everywhere.
The thing about Atlanta and Houston and Dallas, there's land everywhere. All you got to do is get in a plane. God's not making any more land, right? Well, okay, whatever. Yeah. Get in a plane, man. Fly over America. There's land everywhere. I mean, everywhere there's land. Like you can't not find land. If you do, you're over the ocean. If you're not over the ocean, guess what? It's land. It's land. Okay? People are like, oh my God, it's too expensive in Dallas. Okay, well good. What they do is they build another place out, 45 minutes away. That continues to put pressure over time though, over that downtown as long as jobs stay downtown. Same thing with Houston, same thing in Atlanta. So in Atlanta, Houston, Dallas, these are markets that you need to know, and I tell Ryan all the time, Ryan, we're going to Houston? Bro, we got to be so selective there. I mean, we got to be careful selective. I almost never use the word careful. When you're buying real estate in markets that are flat, if it's flat, Jacksonville, you got to be careful in Jacksonville. Until this last 3 years, Jacksonville didn't have a lot of job growth. It looked like that's going to happen right now. But even so, in Jacksonville, you still have to be careful on a clock. If you look at a clock, where you're buying. Atlanta, Buckhead, dude, that's always going to be good. Buckhead's always going to be great. But look at the cranes. You mentioned cranes in the air. What do I know? Beware. Because the builders always overbuild. So you got to be really careful right now. I do love Atlanta. I love it long term. I love it today. I love it 3 years from now. I love it even more 10 years from now. Because these people up in the north, these crazy wackos in the north, they come in south, folks. They get older, they come down here. Most of them don't have the guts to come all the way down where it's really good down here in Miami, not Orlando, not Tampa. That's not even Florida, okay? You don't get to Florida till you get to Miami, folks. The rest of that is just made up bullshit. Okay, everything north of Miami is this is where you're in the subtropics.
Yeah, subtropics.
The water's different. We got red tide down here, man. I had somebody outside my place yesterday. Some guy, we woke up yesterday morning. Done.
Hey, Grant, can I clarify one point, just about one point that you made there?
Tapped out. Yeah.
Yeah, so...
They were checking him for
basically,
rigor mortis out there on the beach.
Hey, can you still hear me?
Oh, yeah, I can hear you perfect.
Hey, Grant, can I ask one clarification question
That's
on
it.
that point
That's
you
it.
made
You just
about-
asked it. Go ahead.
So basically, like, are you saying that because there's so much land, and I get it with Atlanta, like, there's so many trees in Atlanta, it's actually still can be considered a forest despite of how big of a city it is. So, like, your point is definitely extremely valid.
Yeah,
but,
yeah.
like, are you saying because there's more land, you got to worry about, like, always being, you know, not in line with replacement costs?
No. What I'm saying is I have to come do research. Like I bought that one deal in Savannah. I've not been able to put another deal around it. I want to put another deal around it, but I haven't been able to. And Savannah was easier for me to understand than Atlanta is. The bigger the market, the more complex that is, and the harder it is to understand where's that market. Like I just bought a deal in Maryland. I've been shopping Maryland for 3 years to finally buy one deal. This is what a lot of you I don't think you guys get. You know I made the same mistake when I started in real estate. I bought the first house I looked at. I'm buying that one because they told me I could get a loan on it. So I went and bought it. And a lot of people get tricked into real estate like this. I can get you a loan on that deal. Okay, I'll do it. Because I thought all real estate was created equal. It's not, man. Location matters, markets matter, jobs matter, what they're building around it matters, the barriers to entry. All of it is in the program, folks, if you want to grab a hold of it. He's read the book 5 times. He needs to now advance himself to the home study course where I start walking through these scenarios and why I like certain markets and who you talk to there, who you call there. How do you underwrite a deal? How do you figure out a deal? How big's a deal? When's a deal too big? When's a deal too small? And what's the right size? I hope you enjoyed the show today. My name's Grant Cardone. This is the Cardone Zone. Every Monday, I come to you to talk about how you can invest your money in real estate if you don't want to do it on your own. If you don't want to find your own deals, buy your own deals, manage your own deals, get the debt, but you want your cash or your KEO or your retirement account or your cash account, your money markets, or you want to get out of the stock market and you want to invest in real estate that cash flows every month. We pay checks every month. Almost $20 million in distributions last year from Cardone Capital to our investors. I do the work. I find the deals, buy the deals, finance the deals, get the deals funded, do the underwriting, the due diligence, argue with the seller, argue with the banks, argue with the tenants, evict people when I need to, rehab the properties, fix them, and then I find a buyer for them down the line, as well as distribute cash flow to the investors every month. I'll do all that for you. It's CardoneCapital.com, CardoneCapital.com. If you add CardoneCapital.com/call, C-A-L-L, you can spend 5 minutes with one of my people on the phone or myself. Don't be surprised if I don't pick up the phone. And I'm happy to answer your questions, okay? Almost $20 million last year was distributed to investors. CardoneCapital.com, $1.5 billion of assets under management. I believe nobody does real estate better than I do. As well as coming on here on Mondays and sharing with you how you can go do your own deals if you got the courage, if you got the time. And ladies and gentlemen, please make sure you have the know-how. Not everybody makes money in real estate. Trust me. Okay, trust me. Not everybody makes money. I know people that have lost everything buying real estate. Buy the right real estate, find the right size, be in the right market at the right time, pay attention to the real estate. It'll take care of you forever. Thank you for watching today. Please comment below. Subscribe to the channel. God bless. Be great. Remember, peace, love, and cash flow.